If you're writing a tax check this year that makes you want to scream into a pillow, you're not alone. And if you're making great money, but you're still bleeding cash every spring, you're not broken. You're just not using the system the way wealthy people do. No one told us the truth. Real estate isn't just a nice to have. It's a weapon when it comes to taxes. I didn't learn that from a course. I learned that the hard way after years of giving way too much money to the IRS until one property and a few smart shifts that changed everything. Hi, I'm Tamar Hermes, and this is the Women Growing Wealth podcast. In this episode, I'm sharing real estate and a few key tax tips that can help you save big this year. Let's get into it. Every spring, like clockwork, I hear the same sentence from high-earning women about taxes. Next year, I'll do better. And I get it. I used to say the exact same thing. Taxes would hit, I'd write a big check, I hated writing, and I tell myself, I need to figure this out. I make good money. Why does it still feel like I'm losing so much of it to taxes? Year after year, it didn't change until finally I did something about it. And no, it didn't involve couponing or learning to love spreadsheets. I bought a property with a purpose. And it changed how I play the wealth game forever. Let's break this down. About 8 years ago, I bought my first short-term rental, not just for cash flow, not just for a dream of passive income. I bought it because I realized something no one had ever taught me. Real estate isn't just an investment. It is a tax strategy. This wasn't about becoming a landlord or a property manager. It was about finally using the tax code the way wealthy people do to keep more of what I earn. Here's what I did. I bought a property for $280,000. Now, let's say the land value was $30,000, which left me with about $250,000 of depreciable value. Now, depreciation sounds very technical, but here's the simple version. The IRS lets you deduct the cost of the building over time, even if the building is going up in value. I know, pretty cool, right? So by owning this property, I got to write off a big chunk of its value. And it didn't stop there. Because it was a short-term rental, I could run it more like a business. And that meant I could also deduct things like furniture repairs, travel to and from the property, insurance, cleaning, professional management, supplies, and one of the big ones, utilities. I love writing that off. Basically, everything it took to operate the Airbnb became a tax deduction. And here's the kicker. If the property is available for rent and operating for at least 7 days in the year you purchase it, the IRS lets you take those deductions to help reduce the taxes on all your income, even if the income is from your job or business. That's huge. I didn't just buy a house. I bought a business with built-in tax benefits. That year, I saved thousands, and I've used that same strategy again and again. So here's what you can do if tax season is hitting you hard. And these are a couple options. So maybe you're not ready for the Airbnb, but you still don't have to keep doing things the hard way. So the first thing you need to do is you need to plan ahead. You need to meet with a CPA who understands real estate. Now, it doesn't necessarily have to just be a CPA that understands real estate, but it needs to be someone that's strategic, someone that doesn't just file for you, someone who can look at your whole financial picture and guide you, especially if you plan to invest. And sometimes you also need some sort of strategist on top of that. Number 2 is don't let traditional deductions go without deducting them. So 401ks, IRAs, all of those companies match, and they can be really big strategies. And the third one, of course, is to explore a short-term rental. If you want tax benefits this year, the property must be in operation at least 7 days before the year end. So that means you want to get it listed and booked and in motion well ahead of the year end. So you see, tax strategy isn't just about real estate. It's about using strategies that work. So my final thought for you is to make the IRS work for you. Here's the truth. If you don't plan ahead, the IRS becomes your most expensive business partner. But when you understand how to leverage your income, your investments, and your timing, everything changes. This isn't about beating the system. It's about learning how to build wealth with intention. You don't have to do it alone. You just have to get started. Now, if you want more support, I'm going to offer you to visit my website and click the link to get on a wealth breakthrough session, which will enable you to see what your next wealth moves are right now. And if you like this episode, please subscribe now.